Hey everyone, thank you for joining us for another episode of The Agent Investor. I am Brandon Rush. The goal of The Agent Investor is to help our audience make informed decisions in their commercial and multifamily real estate by having informed conversations with professionals who operate in the space. Today we have a good friend of mine, Dennis Breitrick from BDC Capital, joining us. Dennis, how are you?
Hey, Brandon. Very good. How are you?
Very good, very good. Yeah, thanks for coming on. So Dennis is a good buddy of mine, and simply say it, him and his company they service owner occupants and their financing. But I'm going to leave it at that in terms of how far I explain it and let him dig deep in. So, Dennis, tell us more about yourself, your background, what you do.
Absolutely. So my name is Dennis Breitrick. I'm a business development officer at BDC Capital, CDC New England, and we partner with banks to help business owners purchase owner-occupied commercial real estate. And the financing can also be used to construct commercial real estate. It can be used for leasehold improvements and also equipment. So I started my career with Bank of New York Mellon in 2006. Since then, I've worked at Chase, KeyBank, and M&T. Love being at BDC Capital, partnering with banks and financial institutions to help business owners out.
Very good. Thank you. Thank you. All right, so we're going to dive deep in, right away. So we're going to talk about the SBA 504 loan program. So, tell us what it is and, why it's so appealing to owner-occupied commercial real estate buyers.
The way it works is we will make a loan for typically 40% of a total project cost, and then the bank will make a loan for 50% of the total project cost, and that means the business owner is putting in 10%. So that's our most common structure. So it's a low down payment compared to conventional commercial real estate lending or other loan types where the down payment might be 20, 25, 35%. This is 10% down. So it helps business owners to conserve cash up front and kind of boost their post-closing cash reserves. So it's a low barrier to entry with the small down payment. Once the loan's established, it's a long-term fixed rate. So in the case of equipment, 10 years fixed, fully amortizing. For real estate, 25 years fixed, fully amortizing. There is a 20-year option as well. In light of the interest rate environment, most people are going for the 25. But it's great if somebody wants to know their monthly payment for the next 25 years, our portion's fixed, fully amortizing. Banks don't have to match that, so a lot of banks will do like a 5-year rate, but they will match our 25-year amortization. So you'll see like, long term, you know what your payment is for the first 5 years with the bank, right? Every bank's different, so we kind of let them choose the rate based on the risk profile. The properties are owner occupied, so it does have to be 51% used by a business. So you can just picture like a restaurant, right, where the restaurant is in the building, and that would be a case probably 100%, right, if there's no other
Yeah.
tenants. Businesses can have tenants, but again, the tenants will take up 49% or less of the total square footage of the
Okay.
property. There are cases we get creative, right? So if you have one that's close, don't hesitate to call. If it makes sense, if the business is using the basement or the attic or the upstairs, or maybe it makes sense to go outside in the case of a landscaper or a florist or nursery or some type of hardscape landscape company, we can do that. It is a program for small businesses, so there is a size test. Most businesses qualify, about 98% of companies qualify. It's tangible net worth under 20 million, average net income under 6.5 million. So, and then there are some cases where we look at job creation if for some reason it doesn't fit in those parameters.
Got it. Yeah, very nice. So a few things I want to kind of touch on that you spoke on. One being you said construction. So can this be, ground up construction or, add-ons to a facility that someone intends to buy? Can you dig into that a little bit?
So in the case of ground up construction, we do a lot of loans where clients will buy land and then they have an engineer, an architect, a construction company draft up estimates, plans, and a budget for how much it's going to cost to build their building. We have a spreadsheet where we total up all the costs that it's gonna, take to build, and then that's the total project rate. So we'll finance 40%, the bank will finance 50, and then the client will put 10% in. So ground up construction is absolutely, part of the program. And to answer the question about additions, there's more than one way to do it, but yeah, one way is let's say they own the building already and they want to put an addition on. Well, similar concept, right? We get the construction estimates, we model that out. Sometimes, if they already have a mortgage, we could do like a refinance with expansion, they call it, to get the addition done.
Got it. Got it. And another thing I want to touch on, you spoke on, down payment required. So 10%, pretty low. Like you said, that kind of allows the buyer to have some reserves in the bank. Is there, I remember you did a presentation recently. There are some situations where they may have to go higher than 10% for their initial down payment. Is that the case? Can you remind me?
Yes, thanks
Yeah.
for bringing that up. So for a startup entity, which is a company in operations less than 2 years with not a lot of industry experience, we will make the loan, but to adjust for risk, there's an extra 5% requirement. So in that case, the structure would be the bank's portion would still be 50%, our portion would be 35%, and the startup entity's portion's 15%.
Got it.
Or if the property is special use, meaning it can't easily be converted into, many things. So picture an amusement park or like a building with a pool in it, a marina.
Mm-hmm.
Those are considered special use. At this time, those also require an additional 5%. So similar concept, right? 50%, 35%, 15%. If it's both a startup and special use, then it would be 30, 20, 50. So you get both. There is some legislation in the government. It passed through one of the branches. It still needs to pass. It's not out yet. But what they did was we looked at all of the data from repayment ability and default rates, and we found there's not a huge difference between special use, non-special use. So we're
Hmm.
trying to make it easier for clients and eliminate that extra 5%. But in the mean, and I'll keep you posted. If you follow me on LinkedIn
Yeah.
or you want to be added to my email distribution list, let me know because I like to, notify people when stuff like that passes through the government.
Yeah, absolutely. And one more thing on, still kind of working on that first question we had there. What's the structure of that? Obviously, you hold a certain amount of the loan, they hold a certain amount of the loan, and you mentioned the 5 year. Is it many times it is an adjustable rate on the loan's term, but your term stays fixed for the 25 years or 20 years?
That's right. Yeah, our term is
Okay.
fixed, long term, fully amortizing. So a client will know, what their monthly payment is for the life of the loan. Every bank is different, right? So we leave it to the banks to determine what the terms are. They are required to at least, let's say we do a 25-year loan, the minimum term is 10 years. So there can't be a balloon before year 10.
Got it.
The rate is negotiated, right? So they might be comfortable with a 5-year rate, they might have a 10-year rate, and it's not often we see them do more than 10 years, but there was a time that you could get 25 years fixed fully amortizing from a bank. But
Hmm.
yeah, it's all, I always ask what bank a client is working with if I don't know already. That way, we have contacts, we work with all the banks. So whoever it is, we talk it out with them, we figure out what they want to do, and then we go from there. But in most cases, clients can fix a rate for 5 years, so they know for the first five, and then it resets based on an index. So a lot of banks will use like Federal Home Loan Bank of Boston as an index, um, and that is the most common. But I suppose they could use SOFR or another index.
Sure. Absolutely. All right. No, cool, cool. So you kind of touched on this, but not super in depth. What type of industries qualify for SBA, 504 loans? Any, surprising ones that people don't expect to be, to be included?
For-profit entities, right? Similar, not-for-profit is, there's other funds that would be used for something like that. Cannabis is legal, but since it's a federal program, we wouldn't lend to cannabis yet. Adult entertainment, we can't yet lend to. But everything else, so we do a lot with restaurants, manufacturers, service businesses, retail. car dealerships, laundromats, car washes, gas stations, breweries, hotels, golf courses, sports bubbles, campgrounds, quarries. So yeah, a lot of cool projects out there that we're working on. Recently helped a marina out, so that was a fun project. Nice family-owned company where we helped them buy their fifth location. So yeah, every deal's different. It's part of the fun is learning about what business owners are up to and how we can help them with their next step.
Yeah, no, absolutely. No, very good. Walk us through what a typical application would look like from beginning to end for someone applying for SBA loan.
Yeah, so based on that, I like to be involved as early as possible. That way we can set expectations and, talk about the structure, the down payment, if it's startup, established, special use or not. And yeah, from there, so clients will work with their real estate agent, someone like you, to draft the purchase and sales agreement. So that's part of the package, right? So we're gathering a couple years of business and personal tax returns and a personal financial statement to outline the financial condition. We couple that with purchase and sales. If there's construction estimates, we gather that info to check on the repayment ability.
Hmm.
Our credit team takes about a week or two to make a recommendation. From there, it goes to our board. Our board votes electronically, so they're really quick, really fast. We're not waiting around for a meeting every 30 days, so that's a nice plus of working with us. And then from there, it goes to the SBA for formal approval. Once we have board approval, the bank will typically order an appraisal and an environmental, which we can use so there's no duplication of efforts with the due diligence. The way that works is they just name SBA or us as an additional intended user on the due diligence, and that lets us use those items. And then assuming positive outcomes on, the cash flow, collateral, credit history, all the due diligence, we turn it over to attorneys who draft up the documents, and that can take, a couple weeks to process, and then we close.
Got it. So to summarize that, how long is the turnaround on it? Generally speaking, I know it varies deal to deal, but generally speaking, how long should one expect to kind of close, with an SBA loan?
Average is 60 days. Unique situations. If there was like a rich environmental history, then that process might take a little longer. If there's appraisal issues, it could take a little longer. But yeah, we can go start to finish in 60 days in most cases.
Okay, no, very good. And one off topic, still self storage. That's a kind of unique niche in business ownership to the sense that you're not physically occupying this space, but I believe they still qualify for SBA loans. You don't physically occupy yourself, but it is your business.
It's interesting because anything that sounds, passive or investment, the Small Business Administration gets nervous. We like to have, active management, boots on the ground, and business ownership. But yeah, self-storage, surprisingly, we can lend up to 90%. It's not special use. It's not considered investment. And yeah, I think we just want to know that the managers are involved, right? I know it's like low touch these days with technology. Everything's like key card cameras, and
Yeah.
it's not like I don't think someone has to be there 24/7. But absolutely, yeah, self storage. We do a lot of self storage deals, and definitely I can appreciate as a homeowner. I can appreciate square footage is square footage. I think during COVID, everyone cleared out space, made home gyms, and put some stuff in storage. So as a business, from what we could tell, they're doing well. So we're just case by case reviewing, the financial condition and any opportunities to to lend.
Yeah, got it. No, absolutely. All right, so circling back to a question that we had at the beginning about newer investors, or not sorry, investors, but business owners. Say if someone is, fresh, they're just starting a business or they're just maybe 6 months into their first business. What kind of, requirements for history or track record would someone need to apply for SBA loan, generally speaking?
Yes. So startups are absolutely eligible, and we do lend to them. And yeah, what we want to see is industry experience, right? So I think one industry where it's relatively easy is in the medical dental space, where
Hmm.
people as part of their education They are, working in the hospitals or working with a medical group, gaining experience. So what a startup entity will do is they'll put their resume, they'll create a business plan, talk about key employees, the target market, the demographics, how they're going to grow the company from, A to Z. And then, so we'll take their business plan, we'll take projections, right? So for the first 2 years, they'll tell us, each month, revenue minus expenses, net income, and we'll use that as a basis for repayment ability. And yeah, love to see, startup businesses, love helping them out with financing, and we're using projections. Whereas, so in the case of an established company, you're going to have historical financials, so, tax returns and a long history of, financials. So just a little bit different, right? Looking at projections and a business plan, but happy to help with both startups and established companies.
Got it. Got it. Very nice. All right. Any recent or upcoming SBA program changes that the audience should know about?
Yes. So our director of SBA lending, his name is Dave Raccio, and he was recently in Washington, D.C. talking to senators about how to improve the program. And I know I touched on, eliminating the special use 5%. That's one of the things that are in process. But periodically, the SBA updates their policy. And an important one that just came out, veteran-owned businesses are prioritized. So they're picking up those files, they're working on them real time. And they also, so in the past, environmental reviews, the SBA would decision them, right? So they would approve or decline or, make some comments on environmental reviews in all cases. But what they found is that the certified development companies, so us at BDC Capital, CDC New England, were able to, if it says no further action and it's no low risk, so picture like pretty much a lot of properties, but not a gas station or not somewhere that has an environmental history. So low risk, no further action. They'll take our word for it, and they'll take our approval on the environmental. So that helps speed up the process and one less set of eyes on environmental. The government reintroduced the franchise directory. So what that means is for franchisees, we do a lot of lending to franchisees. So like Dunkin' Donuts, Jersey Mike's, companies like that. They all have agreements, right, between the franchisor and the franchisee. What we're looking for is that there's no language in those agreements that impacts our lien position. So when a bank makes a loan on a property, they want to be in first lien position. We take second lien position, and then the franchisor, if at all, they would be in third. So we're just checking those agreements, making sure there's a list of already approved franchisees. So we'll check that list. If a company's on there, great. We just keep going. If it's not on there yet, there's a process. We can help you out with it. But that directory, last few years until recently, didn't exist, but now it's back. They also just came out with one about a week ago. We can only lend to U.S. citizens. So in the past, we were able to lend to legal permanent residents. That's a big change, but definitely, part of the application process now asking if people are citizens. For construction projects, we can build in a contingency, right? So anyone who's familiar with construction, sometimes, labor costs can go up during the project or materials can go up. We have a situation where lumber costs were rising, right? So the contingency lets the client, access additional capital for construction overages. Before recently, the maximum amount was 10% of the project. So let's say it was $1 million construction project. We could build in $100,000 contingency. They increased it to 15%. So now we could build in $150,000 contingency. So if they use the money, great. It was there. We could finance it, 25 years, fixed, fully amortizing. If not, that's all good too. It's just a lower loan amount on day one. Also, part of the government initiatives is to help manufacturers, right? And the administration loves to see, American-made products. So for manufacturing companies, they reduced the guarantee fee by half a point. It's been great working with, manufacturers, being able to give them, some discounts.
Is the guarantee fee like a upfront origination fee?
Yes. So there are
Okay.
fees to keep the program going, right? And we can roll them into the loan amount, so it's not a huge out-of-pocket expense day one.
Sure.
Um, but yeah, there are fees, and for manufacturing, we're going to, reduce those fees. And then another recent announcement was in the case of a refinance. So I don't think we talked a whole lot about refinances, but it
Hmm.
is, um, something that we do. You can increase the cash out on a refinance to 90% loan to value. And that's an increase from, I think it was 80 before that. Business owners are able to, kind of maximize the equity in the property.
Nice.
And then they also, so an affiliate would be if you own multiple businesses, they have a certain definition of affiliates. They made it a little easier to access funds if you own multiple businesses. So that's a nice benefit here. There are a couple that aren't out yet, but they're talking about there's a bill right now to increase the loan size for manufacturers from 5.5 million to 10 million. So the maximum loan amount that our portion can be is 5 million under normal circumstances. For manufacturers, we can go up to 5.5. They're talking about increasing that to 10. So the total project can be any size amount. I know we work on $20 million hotels. As long as our portion is five, then they make up the difference between the bank and the business owner. And then there's a similar bill that has all of that in it, but would also add 5% down payment for manufacturers. So 95% LTV. They can access more funds and lower upfront costs. And then they're also trying to make it so that manufacturers have an owner occupancy percentage of 50%. So if the building
Hmm.
is, floor one, floor two, even, we'd be able to do that. Whereas today it's 51. So we gotta, get a little creative there. But those are, yeah, all to be determined stuff. And, follow me on LinkedIn and, or subscribe to my newsletter, and we'll keep you posted as that stuff materializes.
Absolutely, and kind of jumping on that the last comment you mentioned regarding the 51 to 50%. If a building now is say 50%, I mean, ideally could they do an add-on? I don't know, a closet or extra parking space to if that's what it needs to turn it into 51%. If it comes down to it.
So it can be, yeah, we're looking at a total project, as complete. So if that, yeah, as complete is more than 51%, then, that's good to go. We recently had the Dunkin' Donuts where, the drive-through window with the pop out, and it's like a pink, Dunkin' Donuts awning. That's what made it 51%. So
Got it.
it's, we're looking to help clients, and, we often, will go into the basement for square footage, or look at the situation. But yeah, definitely the programs for business owners, trying to make it easy so they don't have a landlord. And unfortunately, investment's just not part of it now. There's a lot of good banks. If you have an investment deal, happy to connect you with a bank that is comfortable with that situation. I think it might be a little bit different, terms and conditions. But yeah, in the meantime, owner occupied projects.
Absolutely. Got it. Got it. All right. So, last question in terms of SBA lending. What's the most common advice you give individuals, considering applying for SBA loan?
Yeah, I would say just enlist the help of your team, right? So when clients contact their CPA about the financial requirements, start working with your CPA early about, assembling tax returns or interim financials. Create the personal financial statement, make sure that looks nice and clean. Working with a real estate agent like yourself who's experienced with, different types of properties, that's always great. So definitely, making sure the purchase and sales agreement has language that you're comfortable with. And I've found attorneys are great trusted advisors too when it comes to, drafting legal contracts or kind of sorting out any negotiations. So just, assemble the team and check in with them, use your resources. And then just planning ahead, right? So, you don't want to be in a rushed situation or a time crunch. So kind of, sitting down. I love, January is a good month where people kind of
Hmm.
thought about how they want this year to look, and having a business plan and projections to see, how realistic a project is. I think all of that really helps us with, us creating the loan.
Absolutely. All right, cool. So we're gonna start wrapping up here, and get out of the SBA questions. When you're not assisting clients with SBA lending, what is some of your hobbies you enjoy?
Just spending time with the family, small kids. So, we love in the winter, we're skiing a good amount. So this afternoon I'll be at Ski Sundown. I'm a mountain chaperone for my kids' elementary school. So we'll do that. And then just love giving back to the community. So tomorrow we'll be there's an event for the United Way that I'll be at. And you've golfed with me, so I don't know if you're going to believe this, but in the summer, we get a good amount of golf in, and if it's for
Yeah.
a tournament for charity, something like that, kill a couple birds with one stone. So just keeping active. I think the physical and the mental go hand in hand. Just active in sports and hitting the gym.
Got it. Very good. What's the best way for people to find you and or get a hold of you?
Sure, my cell is 203-824-1755, and my email address is dbreitrick@bdcnewengland.com.
All right. And
So,
any final words for the audience before we take off?
thanks for taking the time to hear us out. I'd love to learn more about, how your year wrapped up and what we can do to help with your business plans. So, don't hesitate to reach out, and would love to learn more.
Yeah, absolutely. All right, everyone. So thank you for joining us for another episode of The Agent Investor. Dennis, thank you so much for jumping on and for your time. We want to wish you all the best in your health and happiness, and we will catch you on the next episode. Thank you, everyone.
Thank you.